Where do you think markets on the other side are pricing in, like you said, 5-10 years of terminal growth which may not be the reality? Which end of the market? Is it FMCG? Is it cyclicals? Is it capex? Where is that happening?
So there are segments of the market
which have become Humpty Dumpty.
Which were to a greater extent till few months ago, and they have seen some correction. And I think again, not each company within that sector, but yes, sectors like or companies exposed to industries like railways, defense, some of the deep cyclicals and manufacturing, they are extrapolating not only very high growth for a very long period of time, but also extrapolating, more importantly, they're extrapolating that the same set of players would capture that opportunity. Because many of these companies are companies which don't have strong, defensible, sustainable, competitive advantage. They find themselves in a position where all of a sudden the opportunity set has exploded. And yes, they are growing at very hyper rates. But because there's no strong competitive advantage, the industry would attract new players. And so if the industry is going to grow from 1,000 to say 10,000, it's not necessary that all the players who make up that 1,000 will reach to 10,000. The new entrants might take more than half of that some future years, 10,000. So on those two counts, I think many of these sectors which don't have strong defensible business models but have seen hyper growth, their valuations are way ahead of themselves even now.
Okay. I'll use consumer tech and fintech just as a segment to represent to capture your thoughts here. You have a large position in a consumer tech company. It's in public domain, so I'll share it with the public, Zomato. Now, you're a big votary of free cash flows, but when you invested, let's say, in some of these consumer tech and fintech companies, they were loss-making. Cash flows would be unpredictable because they're expanding. So what prompted you to change your framework, which is centered around cash flow, when you invested in this consumer tech and fintech companies?
That's excellent question. Excellent question. I've got this numerous times.
Okay.
So see, when we say focus on cash flows, it's not necessarily just cash flow of this year. It is, as I was saying earlier, value is present value of future cash flows.
Of course.
Otherwise, if you just look at this year, you won't be able to invest in so many companies. In fact, Warren Buffett himself has said that he missed out on Walmart because it wasn't generating cash flow at that time. But present value of future cash flows was still very huge for Walmart. So we are, and obviously you make mistakes as well, but we do believe not only the company that you cited, but there are many other companies in this sector and in other sectors which may not be generating cash flows today, but have very strong prospects for cash flow growth going into future. And it's not that's the first time it's going to happen. This playbook has played out across the world. So I was there investing in the US market through the dot-com bubble in 2000. Yeah, day one investor in several of those digital that time used to be referred to as dot-com companies.
Yes.
So many of those didn't make any money. Amazon didn't make any money. In fact, Amazon has been my biggest miss in my career. I didn't ever invest there.
It was a loss-making company for a long time.
It was loss-making for a long period of time, and it seemed like the more they grow, the more losses they make. So where is the operating leverage? So that one we missed. But yes, Google and others, which were loss-making at some point in time, they are now generating. They are the FANGs or the Magnificent Seven or whatnot of today. So a big lesson, if there was, if someone did make a mistake at that time to only invest in free cash flow generating companies, a big lesson through that time period would have been, it's not the cash flow of today that matters, it's the cash flow, present value of future cash flows that matters.
Like I said, focus on whether the puck will move.
Exactly. So where it is going to move in future, that is most important. And not just US, then you look at Korea, you look at China. These are all countries and having, so several years have been investing in emerging markets countries. And one of the reasons that we, and this company you mentioned, we have been in a way beneficiary for much longer because of the parent, if you will, which we've been invested in for many years. And one of the reasons that we found that compelling was due to the value that was being created in investee companies. And when you compare to the value creation in similar businesses who had the similar competitive edge, first mover advantage and other strong management execution in countries like China and Korea, humongous wealth has been created in companies where cash flows are negative for many years initially, but then they have a huge turnaround in cash flow due to the strength of the business model.
I'll extend my appointment by another 5 minutes, but I'll try to weave in perhaps 3 or 4 questions. As an investor, when you look at the way how India has evolved, who would have thought digital payment would become that large? Who would have thought even a company like Zomato, which got incorporated or incubated in 2010, will be part of the Sensex? Who would have thought that IT services would be as high as what the oil, Aramco
Absolutely.
export is? Where do you see outsize changes happening in businesses, and where you would say that they are looking small today, but if we are in 2030, they are going to be the serious compounders? 5 years out, where do you see this large move happening which nobody is anticipating?
So I think just what we were discussing just now, that still has to, we are still in very early stages. Again, I am not saying that the same companies would necessarily capture the whole opportunity, but if you look at this whole new age company space or digital space, in US this whole process started in the late 90s, mid to late 90s, with the advent of internet in the mid 90s. And the initial companies were Yahoo's, Netscapes, and so on and so forth. And 2000 was the huge bubble and the collapse, and then they rebounded. And it's been under process now for 30 years in the US, close to 30 years. Even in several of the emerging markets like China and Korea, this has been underway now for nearly 2 decades. Yeah? In India, we are still in very early stages with very few companies. If you were to count now, you won't be able to count, even a dozen of those. Whereas in most emerging, a country like China, you might be able to count 100 plus of those. Obviously, US has hundreds of them, if not thousands. So it's bound to, this space is bound to see a huge explosion of companies and business models over the next 5, 10 years or whatever, 3 years, whatever time frame you see. As a proportion of the index, is bound to multiply from whatever low single digit it is today to first double digit and then potentially 20+%, as it is in many of these countries. So that is one area I would say would be a very exciting place for stock pickers.
If Prashant Khemka of 2025 has to meet Prashant Khemka of 2000 when you were investing in global .com companies, and if you have to perhaps whisper a learning of 2025 to 2020, what is that big learning where you've evolved as an investor over the years?
So I've only learned from mistakes. I'm very poorly read, haven't actually read a single, other than corporate valuation book. So I would say the biggest learning has been what we spoke about earlier, governance. If I had not invested in companies over this 25 years where which ended up being very misgoverned, and I underestimated the importance of governance. It would have saved a lot of money for my clients and further contributed to performance.
And